but the specific lines. Another thing you have a difficulty with is always goodwill of the sub. Goodwill of the sub's value is always 0. What happens if, and does it mean that it disappears from the books of the sub? No, it's still there. So later on in life, could they have an impairment? Could they impair it? Yes, so in a given year, they can give you the financial statements and they have an impairment. What do you do with that? Eliminate it. Because in your mind, the goodwill is not there anymore. So of course, any further impairment that they take, you have to eliminate. In your consolidated financial statements, the only goodwill that has value is the goodwill from the acquisition of you to that sub. The rest has to be eliminated, of course. Yes?
So the goodwill of the sub is subtracted when you do the acquisition analysis. But after that, do we put it into the continuity schedule?
Yes.
Okay.
It is an FVA.
Okay.
The goodwill of the sub is an FVA. It's the same thing as the land book value is 10,000. If I told you the land fair value is 0. So it's the same thing. Just say, okay, it's a goodwill, but it's treated as any other FVAs. Yes?
Because it's already included in the goodwill.
Well, it's picked up again. If it has any value, it will be picked up in the other goodwill. That's why you eliminate theirs and you look at yours, the overall new one. So we're done with chapter 4, so we can take a break for a few minutes. When we come back, I'll just go through our class notes quickly with you to make sure. I have put on first class information about the midterm, the date, the room, and the structure of the exam. 15 minutes.
You got work today?
Well, you know, there are many calculations. Don't invent anything. These are the ones I use. You know, I think I've done enough communication without you adding more.
Who works? Oh, the website.
There wasn't one.
Oh, got it. In my case, now, if I go to streaming services, I've got to choose one thing. So if I go to see my students' account or whatever, okay.
Yeah,
I
okay.
click any of those buttons.
Yeah, because,
Basically, it builds a framework.
yeah, because that's in the.
But it will never open the item I click.
In there, there's 20 and 12. And here, there's the 20 minus the 15 is your 5. This is net. This is 15. This is 20 minus 5. Minus 15. So the 20 is there. Here. And 15 is there. And then there's the 12. This is net.
There used to be Victor Chamberlain in Montreal. Chamberlain that converted with Chamberlain Hodge. So Victor probably no. We're not removing the sign off.
See, if you work that net, easier. All the problems when it's not so
Pretty good. I'm laughing my brains out. Yesterday, you know how Victor used to be Victor Chamberlain? Okay, you know how Chamberlain left right here to go to another firm?
No.
So yesterday, Victor just bought out that whole firm. And everybody that is partnering in that firm now is back a partner in RSM right now. Like, what the fuck? I can't believe it. I just read a one of my colleagues that came from Victor, went back to Richter. I'm like, oh, fucking Richter Chamberlain Hodge. So like, yeah. It's like, suits.
I don't want to.
Spectre, you know, on the door. I'm just doing the quiz. Say, about me last minute. It took me a while. No, that one I had. It took me like 5 minutes to figure out that I was doing 2,000 that they capitalized and then they. I'm like, what the fuck? Oh, it's just a different 2,000 that doesn't change. Damn, that was stupid. I waste so much time. And then I forgot that I'm doing the CNFBAs, right? So I was calculating the UFBAs. I'm like, what the hell am I doing? Fuck the UFBA. It's this column. So when she said, you don't do it with lines, I'm like, yeah, that's me. Because I have the 2 columns, I'm like, pointing this line plus 21,000. The adjustment. It was just 1 column, 21,000, tally that up, that's the adjustment. Thank you, have a nice day. So it was like 20,200. Forget it. My paper was crap. I'm surprised I got any marks at all considering how shit my paper look.
How did you do the first one?
I know not. Yeah, because I did the journal entry as per my purchase price adjustment.
Okay.
Where you know you think subtract the 1800 transaction fees. So my cash journal was less than it should have been. So much stress because I checked the biggest annoyance is like the sign. Everything is macho. So this one is just the signs. It's like, oh wait, is this an asset or the whole thing is like you bring inventory in and you take it out, yeah, okay. Then you adjust to the profit. So if you're adjusting the profit, you're increasing the cost of goods sold. It's that everything is a plus and becomes a minus, and it's a plus and you report it there and you're like, so my biggest thing is formatting and report it in. Because depending on which line you want to write that thing in, it's a plus or a minus. Just give you exactly what we had in this problem. Exactly what was in this problem. No, top to bottom for trial, the working trial balance, which is like debits, credits. But it's our December 31st, everything in order, which means that your savings are sitting next to your assets, are sitting next to your inventory, are sitting next to everything else. Tout peine, amuse-toi. Parce que dans la working trial balance, c'est comme les deux colonnes, mais des ajustements de montant total. T'as pas besoin de faire des statements, c'est la même ancêtre d'avant. Sauf que c'est mélangé en plus d'être structuré. Fait que tu connais. Et puis en plus, deux feuilles de papier. Le problème, il est là. Tes affaires sont là. Vas-y, fais tes cédules quelque part dans l'endos. Puis là, tu fais comme faut qu'il y ait mon montant, l'ajustement de copies de tabarnak. Donc, mets ça là. Fait que là, t'es mieux de bien organisé avec beaucoup de papier. C'est pour ça qu'il y a tout le temps. Parce que c'est pas non plus, parce que si tu commences à faire de la voiture sur le papier, tu te retrouves pas dans ton monde. Je suis coupable de ça. J'ai tout le temps à ce non, non, écoute, là, les examens straightforward, tu sais ce que tu fais. Comment tu aides, ça peut le faire. Sauf que si tu n'as pas le résultat, puis d'avoir quelque chose qui est pas libre. Si elle ne peut pas le lire, tu n'as pas de part mark. C'est là que ça répond à ta question. Si tu gagnes dans ces séminaires ou pas, c'est comme, en attendant que tu devant le fait d'aider de comprendre, le mieux, c'est pas plus il faut que je me lève la main. Parce que là, il m'a dit que la couleur de toi doit être ça. Oui, 100%. Tu commences à faire une merde. Oh boy. Là, tu fais comme, non, là, c'est OK. Donc, qu'est-ce que tu as fait comme travail? Je le comprends-tu pas? Je le comprends pas. La ligne est là. Si elle le comprend, disons que la moitié de la ligne. Elle vient de pas de toi. C'est pour ça. C'est-tu ça que tu l'aides pas? C'est-tu que tu veux faire? C'est que tu peux faire tout le classique de la comprendre. À la place de la femme. OK. Identifier dans les si tu laisses la colonne non identifiée, c'est plus et moins, c'est plus et moins, c'est zéro. C'est plus et moins, c'est là, c'est quoi? J'ai pensé à coup. Donc, ça, c'est un canard, j'ai dit,
because I told you, every little word in there is important.
I'm probably gonna be here.
Huh?
I'm probably gonna be here.
But as a summary of a summary of a summary, strategic, non-strategic, strategic, fair value through P&L, sometimes fair value through CI, if the choice is made.
That's non-strategic.
Huh? What do you mean?
That's non-strategic.
What did I say? No, non-strategic. 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 And non-strategic actually is more ACCO 310 and ACCO 320 that you've covered the non-strategic part of investments. In ACCO 310, you did investments a bit. In ACCO 320, you did financial instruments. There was investments in there. And it was the fair value method. And your revenue is always your share of the dividends. And if you're fair value to P&L, of course, there will be the gain or loss that will affect your revenue every year. Shares go up, you go up. Shares go down, you go down. What really interests us here is this, and that. Associates, method, equity method, which means that your revenue is your share of the profit or loss of the company you're investing, your associate, which is totally different than your share of the dividends. Your share of the dividends actually reduce the value of your investment. And we've done some examples with numbers, 2 examples. We'll go through that. Investment in sub, basically that's what we've done in chapter 2, 3, 4, 5, and 6. That's what we've done, investment in subs, which is one type of business combination. There's other forms of business combination, but that's the type of business combination that requires consolidation. That's why we spend a lot of time on it. So method in the books could be cost, it could be equity, it could be market value. We don't care about the books really. What we care about is the financial statements. The official one, which means they have to be consolidated. There's also the little separate ones that you might show to your banker, but those not the one that really interest us. The ones that interest us is the issued one, which are consolidated, and that's what we've been working on in chapter 3 and 4. The last one is joint ventures. At this step, I just want you to know how to record them. That's what I've cleaned up a little bit. I sent you an email saying that I've put new class notes because it was a little bit confused in that area because I tried to put GOs and GVs in the same kind of, now I've really separated it because it's kind of different, GOs and GVs. Joint operations are often not a separate entity, but could be also. Joint ventures are definitely always a separate entity. So reporting, joint operation, of course it's kind of consolidated because what you record in your books is basically most of the time the part of the asset that you own. Or if it is a separate entity, then you'll produce financial statements, consolidated but proportional. Joint venture, no consolidation ever. Equity method always. So this is was a sheet to make the link between what you used to know and what you have to update to. These are the rules for ASPE. Unless you are told otherwise, it's always IFRS. Because if it's private company, they can still use IFRS. To use ASPE, you really has to be stated, company uses ASPE. Or else, if we say it's a publicly traded company, of course there's no choice. It is IFRS. If it's private, you could go either way. this was the definition of fair value. These were the examples to demonstrate the difference between equity method and cost method. Business combination. When you have a problem, a case in front of you, first question you have to ask yourself, what is it we bought? Shares or net asset, because it makes journal entries totally different in your books, and also on the other side. You need to know the journal entries from the purchaser's point of view and the seller's point of view also. So first question, you have to really read properly. Did we buy the shares or did we buy the net assets? Or did we do a legal amalgamation? Second question, who's the acquirer? How do you detect an acquirer? There's a definition. If you have definitions, then you can apply it. What's the definition of an acquirer? The one that gains control? Not exactly. The dominant group of shareholders in the combined entity. Because control is not the word at this point. Because company A could control company B, but the shareholders of B actually dominate the whole thing. Aha. Follow? A is the parent, B is the sub. But the shareholders of B own more share than the shareholders of A of the whole thing. That's a reverse takeover. If I ask you who controls who, company A controls company B. Control is a word between two companies. Dominance is the presence of shareholders at a board of directors. That's different. Follow? That's why we don't use the word control in the definition of acquirer. You might, but there's a little, as long as you say it's a group of shareholders that control the board of directors. That's why we prefer the word dominance, to make sure you don't mix up the control link between two companies and the dominance, which is more of a presence in a board of directors. So if the buyer paid cash, is there any chance that he would not be dominant in his own board of directors? No. If he issued shares? Yes. Because then the people who he gave shares to might become in majority at the board of directors. So once you understood that, the journal entries just flow through. There's always the little issues, the transaction cost. I've tested that on you on that. If you've made mistakes, you won't make them again, I hope. Issue costs, nothing new. Issuance costs have always been treated as shareholders' equity transaction. This is not new of ACCO 420. It's old from ACCO 320. The only thing that is new in ACCO 420 is the acquisition costs. When you buy a piece of land and you have to go to the notary, how do you treat the notary costs? Oh yeah? Accounting 1. Notary costs to buy a land. Accounting 1. Capitalize. So why is it that when we buy a full business, we have to go to the notary? Now those costs have to be expense. It's because we didn't buy one thing and put it on one thing. We bought a bunch of things. So then we would, theoretically, we could start allocating this notary cost to buy this big business, which has many assets into it, and put a little bit of it on each of the assets and liabilities that we actually purchased to be consistent with our usual logic as accountants. Because a cost of a thing that I buy, per principle of accounting, must be capitalized because it brings future benefits. we just cheat a bit in business combination because we actually bought too many things and it would need then a little allocation. Or if we didn't want to allocate them, we would have to sit those costs in a balance sheet and leave them there forever or amortize over a period of time that we don't know what. So it would become a kind of a mystery account that we wouldn't know what to do with. So that's new from ACCO 420. In business combination, when you buy a business, related transaction costs to buy or to liquidate has to be expense. Not because they have no future benefits, they do. It's not because they have no future benefits, they do. It's just that it'd be too much trouble to allocate them. So that's the little details that we saw in the direct issue cost. This is all there. There's also the issue of contingent consideration. Remember that? And the problem that we did together, I put one. Payable in shares, payable in cash. These are the examples that I told you to make sure that you shake your head a bit. Put those little cases in little different, cut them in pieces, put them in a hat and draw them at random. So you shake that brain a bit. And then these were our formulas that by now you've played with and that you must know because they are what consolidation is about. And this is that here, an IT demonstration. And we will be there. So Saturday, and after that, make sure that you read your chapter, the following chapter, because it's a big chapter to do in this one class. So you have to be ahead.
Pick up the
No, c'est lui,